points of view. So what does a stable monetary policy signal at this time in Nigeria's economic trajectory?
Well, I think just like Doc said, to determine the policy rate, you have to relate with data. So I was not surprised when all parameters, were sustained and retained. Because what you see over the last 4 years is what I describe as a clustering, of the inflation rate. Inflation rate was a high of 34.80 in December. After the rebasing figures kicked in, it went to 24.48 in January, and then declined to 23.18 in February, and then, of course, shot up again to 24.23 in March. And I now have 23.71 in April. So what you see is a clustering, on that range of 23 to 24. No consensus institution would take any action, even considering whatever is happening globally, domestic and all that, relating to that data. The data is telling you that the economic activities are within that certain range. So there's a need for a settling of that range, and until you see a breakout from that range, no possible decision can be taken. One, like you said, that lag effect, is yet to kick in. And until you have that lag effect kicking, you may not be able to take that decision. So I also now observed that the lag effect of the policy rate, that peaked at 27.5%, and other parameters are already showing, especially when you look at the month-on-month rate. So you have March at a high of 3.90, and you now have April at 1.86 or so. That's more than 2% decline, when you compare the two months. So what that tells me is that going forward, there's likely to be a breakout, either in the figures for May or June. The only little worries, that we'll have in that consideration may be the festival, the Muslim festival. Yeah. Because during period of festivals, prices naturally, jump. But given this month-on-month comparison, my thinking is that except there is an event of excessive distortion in the economy, there's likely to be a further decline, And I think the CBN is also pursuing the targeting of inflation to 21%. And this is, I can see the journey to that 21% targeting, We can also, of course, mention the federal government targeting too, at 15%. Some of us have discussed this. It's
whether realizable or not.
Well, if it's a topic for discussion, there may be rationale for it. Okay. But in the immediate, since we are talking about the MPC, I am seeing, obviously, the possibility of accomplishing that 21% in the next 2 to 3 months, because it's as if all cost indications, all cost items had been taken care of in the April figures. That is why we are seeing that month-on-month difference. It's not every day that you see more than 200 basis points, diversion in data. So when you see that, it becomes emblematic of what is likely to happen in the coming months. So essentially, I believe that going forward, we are likely to see the CBN, in the next. I can project that in the next MPC meeting, review the 27.5%, because I also know that from what the CBN governor said, it's a cause for concern when you have a high MPC rate. 27.5% is a high, But again, it's the option. I'd also argued here that it's a trade-off. It's either you allow the management of inflation rate to come down in a way that it will not impact standard of living, entrepreneurial development, and of course economic growth, than to say, okay, let us sustain it, and at the same time you want to encourage development. The two cannot stay in the same. It's two captains in the same vessel. So it's either you manage inflation and it reduces, or after you do that, then of course you now start driving development.
And then the Naira was projected as a competitive currency. What do you make of that, especially as it concerns both regional and foreign investors?
Okay, before you answer that, we just want to let our viewers know that they can also contribute to this discussion by calling us, by sending SMS or WhatsApp messages to this number. Our phone line is 08169688126. 08169688126. So you can contribute, ask questions, suggestions, and just send via SMS or WhatsApp. Thank you. Please, you can answer the question now.
Well, I think beyond investment, a major evidence of how strong the Naira had become has been the revival of profitability of loss-making companies in 2024. Most top-rated companies in Nigeria, recorded huge foreign exchange losses. You can start mentioning the NTN, Dangote, Abuja, Unilever, and all that, because of foreign exchange losses. But in the first quarter of 2025, we have seen a revival of sorts, in that segment. Most of these companies were not, and have not only, secured their foreign exchange position, some are actually regained, recorded foreign exchange gains, So when you have that, it means it's a different era. When we had a period when, of course, you could not predict the movement of the Nigerian Naira rate. Two, the value was in a free fall. At the point in time, it was going to as much as 1,900 and something, And then you could not, even if it had stayed at that level, it's still predictable, but you now saw high volatility. It will fall to 1,005, and in another 2 weeks, it's up to 1,009. Now that's high volatility. And I think the CBN governor was right to note that the volatility measure of the Naira had fallen from a high of 4% to 0.5%. That is huge. It means that if you are a planner, if you are an entrepreneur, even if you are a household, you can now plan, on what quantity of Naira you will need, to be able to transact, to purchase this quantity, a particular quantity of dollars. So to a large extent, that's what drives the average investor. I want to be able to say, if I have 2 million Naira, this is how much dollar it would buy for me. And of course, when I want to invest in a particular asset, either security, the beautiful right now has been treasury bills and bond, and of course, what he was talking about, real value, real returns, positive real returns, is to note that if you bring in a certain sum into an economy and you invest, and your returns is lower than the inflation rate, it's negative for you, because the real value of your investment is lower than what you are getting back, as a result of inflation. So when we have seen the rates, by CBN to attract foreign investors, the rate is higher, and it is nearer inflation rate.
Okay.
So when it is nearer inflation rate, money will come in. And that is why, of course, foreign investors are coming into Nigeria. But what I also want to note, the character of the Nigerian economy is becoming quite interesting. At the point in time, the concentration was attract foreign investors as much as possible. But now exporters are coming into play. As at the last data that I came across, Nigerian exporters and non-banks, constituted more than 60% of inflow, foreign exchange inflow into the foreign exchange market. Now that tells us we are becoming organic, because the more you move away from the foreign investors, who usually come in with what we describe as hot money, the better. Because foreign investors will bring their money. But at the slightest possibility of disruption, they are off, But when you have your exporters, domestic exporters, bringing back their money, one is a sign of confidence in the economy. Two, it's a sign really that the Naira has become competitive, that they can assess the Naira at the value they have projected. And of course, when they want to start the process of restocking again, the prices will be at that same range. So for me, I think it's a growth that we are seeing. It's not in absolute terms, but in relative terms, it's a growth, and all projections, point to the positivity of the economy.
Well, it's a growth, and all projections